Hey, what's up, my friend? Welcome back to this week's market analysis, right? So in today's video, right, it is for those of you, right, who are, outside with your friends and, your friend asks you, hey, Rainer, what's the stock market's doing? And I go, what's the stock market? Hey, Rainer, what's the forex market's doing? So yep, I get it, right? You've probably, been in my shoes. So in today's video, I will walk you through, right, what's going on in the financial markets right now. We'll cover the stock markets, the forex markets, the bond markets, and commodities. So this will prepare you, right, ahead, right, in case, someone asks you, hey, what's the markets doing? And you probably, have a rough idea of, what they're doing and how you can possibly trade those markets. So all this and more in today's video. I'll see you there. Okay, so the first currency pair we are looking at is the euro dollar, right? But before I carry on, right, I believe you know that on Friday we had the, the non-farm payrolls and the result came in better than expected. So a mistake that I see a lot of traders make is that, they are too engrossed in the lower time frame, right? And when this particular move come out due to NFP, right, there's this portion over here, right? You can, scroll back the charts however much you want, right? And you can conclude that, this trend is pretty much over, right? And you are looking to trade towards the short side. Now, I'm not saying that is wrong, right? But you are basically putting yourself at a disadvantaged position if you do not know what the price is doing on the higher time frame. Because if you look at the daily time frame, the trend is still pretty much intact. All right, it's in an uptrend. Right? In fact, it's in a strong uptrend. The price is still above the 20-period moving average. So, if you are looking to short this market based on the lower time frame structure, right, you want to be prepared, right, to understand that you are trading against the trend on the higher time frame. So if you are short, you really want to be quick in taking your profits or, avoiding the trade altogether, right? Because chances are is that this trend is likely to continue trading higher. Maybe it could have a retracement like this, right? ABC correction, and then it continues trading higher. Because after all, the trend is still intact, and the path of least resistance is towards the upside for euro dollar. Okay, so this is something that I find that is very important. Do not just be blindsided to one particular time frame, because the higher time frame really gives you a sense of what is the overall trend and where the price is likely to move towards, right, in the long run. Okay, so moving on, pound dollar, similar story, right? We have a sell-off on Thursday and Friday, right? And right now, since, the market is still above the 200-period moving average, my bias is still to go long. So this is an area of support, right, which is worth looking at because there could be a potential trading opportunity, right, to get on board towards the upside, right? So this is for pound dollar. Aussie dollar, right, similar story, right? The trend is still up, price above the 200-period moving average, right? Now it's somewhat of in a range, a mini range like this, right? So if you go down to the 4-hour time frame, the range is much more clearer, something like this, right? This area of support, and this is the resistance, right? So you can, of course, trade this range that you see over here, going long at support in anticipation that this trend would continue. For New Zealand dollar, right, same story again, very similar across the board, right? Previous resistance, previous resistance, previous resistance. What does it become? Chances are it will become support. So this will be an area, right, for long opportunity, right, to get long on this uptrend on New Zealand dollar. Dollar Canadian, right, the opposite, because this time around the symbol is dollar against the Canadian, but again the theme is the same. Is you're seeing dollar weakness across the board, right? So we had the strong rally over the last, I think, 4 or 5 days, right? So this, if you ask me, right, possibly, a retracement, right, before another move lower, right? So this is, usually how the market works, right? It does not trend in just one direction all the time, right? It tends to do, a pullback, a retracement, then it moves lower, a pullback, retracement, it trades lower, a pullback, a retracement, then it trades lower. Of course, there are times that, the market just simply does a V-shape boom, right, all the way back in the opposite direction. That is possible as well. But we are dealing with probabilities here, right? So more often than not, right, the market tends to pull back and then continue back towards the trending direction. So again, this dollar Canadian. dollar yen, I would say this market is the one that stands out, because as you've seen earlier, the earlier pairs that I've shared with you, right, the dollar is basically, I would say the other pairs are in a trend, either an uptrend or downtrend, and you are seeing dollar weakness across the board. For dollar yen, it's pretty much in a range. It's not in a trend, right? If you look at it, it's pretty much contained between these highs and these lows, right? So this is telling you that the yen, right, is equally weak as the dollar, right, over the last few months. This is why you're not seeing any trend here, right? So if you want to trade this range, right, I would say the 109 area is the area of support. You can look to get long, and the 114 area of resistance, right, it's a level that you could look to get short, right? So these are, I would say, the two key levels to look for if you're trading off the higher time frames. Okay, so this is for the dollar yen. So that's what I have for the currency market, the major currencies. Let's look at the bond markets, right? The treasury bond futures, right? So if you look at the treasury bond futures, right, it should be clear to you that this market is pretty much in a trend in a range as well, right? So it's contained between these highs and this lows, right? So if you ask me, right, at this point in time, right, my bias is is to favor towards the breakout towards the upside. So why is that? Because when I look at this price action of this chart, I'm noticing one thing, right? A series of higher lows, higher lows, higher lows, and higher lows. So this tells me that there are buyers who are bullish, who are willing to bid at higher prices. So this is why you see higher lows, and higher lows. So what could possibly happen is the market rally higher, pulls back, form another higher low, and then eventually breaking out towards the upside. So this is my bias for the treasury bond futures, even though looking back over the last few months, right, it's pretty much still in the range, but the recent price action has been bullish, right? You see a series of higher lows, right, and there's a good chance that it could break out higher for the treasury bond futures. All right, and let's move on into something that concerns most of us, right? The equity markets, right? Because if you buy stocks and stuff like that, right, you're always watching the equity markets. This is the kind of thing that a lot of retail traders, investors focus on, the equity markets. And generally, if you look at this chart, this is the S&P 500, right? It's bullish. You can see that the price is above the 200 period moving average, right? And if you recall last week's video, we talked about the Indian rupee, right? So basically, we were talking about volatility contraction followed by volatility expansion, and it's the same thing that you're seeing over here on the S&P. Volatility contraction, expansion, volatility contraction, expansion, volatility contraction. Well, it didn't really expand, but it broke out. So this one over here, volatility contraction, right, and chances are it will lead to an expansion. So one thing to point out is that volatility expansion means that volatility has expanded, right? You're seeing large range candle, but it does not mean that it cannot go against the trend. Because for this example over here, you have a volatility contraction, but this expansion is actually against the trend. So this is possible, and I want you to be aware of it, right? So right now, again here, you have volatility contraction, right? And chances are in the coming weeks, right, you could see volatility pick up, because it's unlikely for the market to remain in a low volatility period for a very long period of time. So how can you trade this volatility contraction, right, to enter the trade right before the range starts to expand, right? You can go down to the 4-hour time frame, right, and look for relevant structure of the markets that you can trade. So for example, what I'm seeing over here on the S&P is that hey, this one over here is a level that you want to be paying attention to, right? This is pretty much in a range. So if the market comes back towards the low of the range, right, you can look to go long near this area of support, right? Look for a valid entry trigger, or it could be in the form of a pin bar, an engulfing pattern, a form of price rejection, and look to get long in expectation that the volatility would expand and then eventually break out of this range. So this, to me, if you ask me, this is a very favorable risk to reward trade on the S&P 500. Okay, so this is a trade that it's worth watching on the S&P. Right, another market, right, is Hang Seng. Is another bullish equity market, right? If you ask me, right, the S&P and the Hang Seng are the two most bullish ones at this point in time. So this is why I'm covering this right now, right? If you just pull out the 20 MA again, right, price is just way above it, right? So at this point in time, right, if you're a discretionary trader, I don't think you want to be going long near these highs over here, because at the back of your mind you'll be thinking, man, the market is so high, right? Are you sure you're gonna go long at this point in time? And at the same time, right, you don't want to be going short because, you know, you're just going against the trend. So what should you do? What can you do? Okay, so at this point in time, right, you really want to, you know, take a step back and ask yourself, you know, at which point of the chart, right, represents, you know, an area of value where you can trade off. Okay, so looking at this Hang Seng market, right, an obvious one that I'm seeing over here is this level over here, previous resistance that could act as support, right? Alternatively, another one that I would say is worth paying attention is the 50 period moving average, right? Notice that you got a number of bounds over, right? 1, 2, 3. So if the market comes back here towards the around the 50 period moving average, right, it's an area of value, and you know, you can look to get long at this near this moving average for the Hang Seng index. All right, so be aware, right, of what the Hang Seng is doing, right? It's bullish right now. It looks overextended. So, you know, usually for a discretionary trader, right, you know, you don't want to be going long at this point in time. Okay, so this is for the Hang Seng index. Let's move on, right? The last but not least, I want to talk about the copper market. All right, copper is this HG. So copper market, right, if you look at it, right, on the weekly time frame, right, you see that, you know, basically this long-term downtrend, right, is, you know, is taking a break, or it could even be potentially be over, right? So you see, you know, this long-term downtrend on the weekly time frame. You have a series of, you know, lower highs, lower lows, right? Then, you know, it broke this resistance, it consolidated, right, forming somewhat of a relatively long flag pattern. Then it break out higher again into this area of resistance. Okay, so at this point, right, I look at the daily time frame. Okay, and you see that the market is basically still, you know, hovering near the highs over here. So if you think about this, right, you zoom out and you saw earlier that this is a key level of resistance. And the market is still hovering at this price. So I don't deny that there's a possibility that, you know, the market could reverse, you know, lower from here. Right? But I like to trade with, you know, what's in front of me right now, which is, you know, the current trend, which is, to me, it's an uptrend because the price is above the 200 period moving average. Okay, so from the looks of it right now, it seems to be forming a potential bullish flag pattern, a triangle, a pennant, whatever you call it, right? Basically, you know, small bodied candles, right? And, you know, I'm expecting higher prices to come, right? You know, if the trend were to, you know, to hold. All right, so a way to get on board this trade on copper, right? You can go down to the 4-hour time frame, right? You notice that the structure of this market is again, it's clearer, right? You can look at this area of support, and if the price comes down lower, right, maybe gives you a price rejection, right, and closes here, it's a valid, you know, long entry trigger in expectation of higher prices to come. So this is for copper, right? Again, you have a strong trending move followed by this retracement move, and, you know, I have no idea where it will go, but my bias, you know, is for it to, you know, break out higher. Okay, so this is for the copper market. So let's do a quick recap, right, into, you know, what we have covered in this week's market analysis, right? You have basically, you know, seen an overview of what's going on in the financial markets. The USD is generally still weak across the board, right? That is why you see, you know, a lot of trends on those dollar pairs, right? Second, right, we talk about the bond, right, the 10-year treasury bond, pretty much in the range, quite flat. So let's draw this as a, you know, a straight arrow. Then we talk about the indices, right, the S&P and Hang Seng, right? Generally, I would say bullish, right? Most of the indices markets are in an uptrend, and the strongest being the S&P and the Hang Seng. And then last but not least, we talk about copper, right? Also bullish on this, right? The chart that you're seeing right now, potential bullish continuation pattern on copper, bullish, right? So this is what is happening on the markets right now, right? I hope, you know, you found this week's analysis useful as usual. So yep, that's all I have for you. So if you have enjoyed this video, right, I would definitely appreciate it if you know, hit the subscribe button below, right? Like the video, so, you know, it's a feedback to me that, hey, okay, whatever I'm sharing, you know, it kind of resonate with you, right? And that is something that, you know, I'm always constantly working on, right? So, you know, I wish you a great week ahead, right? And if there's anything, feedback, comments, just leave it below and I'll get right back to you. And with that, I wish you, you know, a great week ahead, right? Talk to you soon.